Today we're gonna talk about entry models. And you might actually know some entry models like order blocks or some Unicure model or just entering on the level. I don't know. But I've tried all of them and none of them really resonated with me. And the entry model is not as important as you might think. It's the last piece of the puzzle. The hard work is actually done on the higher time frame. That's the last thing. You don't basically need to overcomplicate the entry model. So my entry model is first an inversion or inverse Fibonacci gap and a change in state of delivery or CYSD. A change in state of delivery is basically a close below or above the candle body of the latest up or down close candles. It's better said than done, so we're gonna show you some examples on the chart. So let's say that we sweat buy side here and we want to go short. This is the latest fair value gap that got inversed, and I would actually not mark this out as change in state of delivery, but I would actually mark this out as a change in state of delivery, just because we want to grab that like where the fair value gap is present, not like this random ass consolidation. But yeah, this is the change in state. And you can see that it got tapped twice, or even multiple times. I would set my entry here, stop loss above, and target other resting areas of sell side. Maybe like this, boom, got filled. Easy as that. So, another example. We can see that we swap the sell side, we scale down to the 1 minute, and what do we see here? The latest fair value gap is all the way up here. And I would not take this fair value gap as an entry because it's just too late and you would get bad risk to reward ratio. So I would enter just from the change in state of delivery, and that would be this. Entry right after this, stop loss below the level, and take profit all the way up here. You can see that it got hit. Okay. Maybe another example. Yeah, like here. Swap the internal buy side liquidity. Let's zoom out. Oh, zoom in. And the latest fair value gap is this. You can see that I marked up because we have two fair value gaps actually, like in terms. But when I see two fair value gaps overlapping like that, I just combine them and draw it as one. Then we got the change in state and entry. You might enter right after the inverse, but entry would be somewhere here after the change in state. Stop loss above the level and take profit even just here, like nice 1 to 2 risk to reward. You see, you don't need to overcomplicate it with some Fibonacci retracements and some volume profiles where the lowest value node or like here the POC. You do not need to any of this bullshit. You just need an inversion and a change in state of delivery. That's it for an entry model. Because the hard work or the analysis is done on the higher time frame, where you form the bias, when you determine the drawn liquidity, when you see whether the market is overvalued or undervalued, if it is overpriced in one direction, and etc. We can actually make one analysis right now. We can hop on the 1 hour frame. And what do we see right now? we see that price went up without any meaningful rebalances. Let's actually go to 4 hour. Yeah, we have a 4 hour fair value gap that is unmitigated. We also have this sell side level. We have this buy side level, and we check for SMTs. Oh, you see, this buy side level that I just marked up on NQ got already swept on ES. So we created an SMT here. SMT. I would be now looking for shorts, but I would not be scaling down to the 1 minute or like even the second time frame. I would scale down to like 15 to 5 minute because my draw is a 4 hour fair value gap. And you cannot just, you also have to match the entry model time frame with the analysis time frame. For example, right now I did my analysis and where the draw and liquidity lies on the 4 hour. Yeah. So I would not be scaling to the 1 minute because there's a higher chance of volatility actually stopping me out before, or even if we got to the target that I targeted. I could also work it out. If you time frame versus the lower time frame, 4 hour would be matched with the 15 minute, 1 hour, the 5 minute, 30 minute with the 1 minute, and the 15 minute with the 1 minute slash 30 seconds. These are my go-to time frames. Actually, the 5 hour would be smashed with the 3 minute. These are my time frame alignments. But yeah, that's it from this video. Today gonna be a short one. See you in the next one. Peace.